Well, during the first quarter of the year, the JSE has actually underperformed global markets. In dollar terms, we're down about 7% versus a 10% increase in the US market. So that's a 17% differential. And this is the first time it's happened in years. And it means that we've got to start looking at what's happening. Why is the JSE underperforming? It doesn't mean that there are no opportunities, but a lot of things have been acting against the JSE over the last few months, particularly the strikes that started in Marikana, the threat of power cuts, the dual deficits, the fact that we're importing a lot more than we're exporting. All of these are beginning to tell on the JSE. But there's another important factor that's taking place as well, and that's in the mining markets. During the booms of the early 2000s, when China started to emerge as a global power, or certainly a global economic power, and there was a huge demand for commodities, commodity prices surged, and that led to extension of a lot of mining companies during the period from about 2001 to 2007. And a lot of these mining companies now have had to write off some of the projects that they invested in. So the write-downs of these projects also in fact cost a lot of the mining heads their actual jobs. All the major mining companies have actually replaced heads, and we're seeing mining companies going through a bit of a consolidation. In other words, writing off a lot of projects and also refocusing their entire businesses in order to generate more cash. And all of this has had a negative effect on the JSE. We've seen particularly platinum and gold shares come under pressure. That's another area. In fact, the gold price has fallen quite dramatically. And the reason that the gold price has fallen is actually a very good sign. The fact that gold is falling is an indication that investors are now less worried about where the global economy is going. They're happy about the outlook, and therefore moving out of safe haven assets. And we've seen a huge pull out of gold. Gold has fallen back from about $1,800 to below $1,600, almost $1,560. So that in essence has also had an impact on our market. So overall it's the resource market that has plagued the JSE and taken it down and made it an underperformer. And this could continue for some time until we start to see an improvement in mining shares. So what does that mean from investors, and how do you position yourself accordingly? Obviously, with the global markets picking up, led by the US, that itself is a huge story and very difficult to explain in the limited time that we have available. But America is starting to re-emerge, driven by cheap energy, natural gas. In fact, in a few years' time, in about 10 years' time, the US will be completely self-sufficient in oil. So America's re-emerging. China never had the hard landing that everybody feared. China beginning to pick up economic pace as well. And of course, all of this will help Europe. Japan as well, taking steps to stimulate their economy. So put that together, we've got a very strong, we're going to have very strong stock markets this year, and that will have an uplifting effect on the JSE, other than maybe the resource share. So where do you place yourself? I'm still concerned about a number of factors within the South African economy. I'm worried that we're going to see a slowdown in consumption, simply that we can no longer keep paying or making these social payments. So I think we're going to see a slowdown in consumption in South Africa. We've seen a slowdown in manufacturing. We're seeing a slowdown in mining. Therefore, that pushes you into one area. One has to concentrate on those companies that are doing business outside of our borders. And that would include companies like SAB Miller, Richemont, British American Tobacco, MTN, Vodacom, Bidvest, companies of that nature that I think that money will be paid. I also expect the African story to continue to be a big driving force of the JSE. You know, Africa is expanding. There are 1 billion people that are moving from really an agrarian society to an industrial society. It's a long path still, but more and more of our companies are moving in that direction, are moving to satisfy them. We've been under quite a bit of pressure because of the weakness of the rand. A lot of our retailers have been sold down, but I think with the weak rand now, it's going to encourage a whole new set of investors to come in, taking advantage of a much weaker currency, buying a lot of our retailers that are expanding, or other businesses that are expanding into Africa. ShopRite, Mr. Price stand out, Massmart possibly, I'm trying to, Woolworths is another company, or alternatively you can look at other businesses that are expanding into Africa, taking advantage of mining expansion there, Barlow World or an Omnia and so on. So to summarize, I think that it's going to be a year, the JSE having underperformed in the first quarter will start to pick up pace, but maybe not at the same pace as the rest of the world, but there's still going to be advantages, particularly in the companies that I've just mentioned now.